What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the London session on EURUSD where there was these three pretty epic setups available for us. I only bagged the middle one here, so this is the only trade that I took. However, in reviewing the session I can see there are two extra opportunities, this one specifically being a super 2.9 I mean, who knows where this is going to go, but a really strong entry based in the silver bullet hour. Let's jump into the high time frame analysis now and see how these three setups presented themselves. As always, we're going to start off our analysis on the 15-minute time frame. We're using our session liquidity tracker to show us untapped levels of session liquidity. So these are the extended green lines that you can see on the chart here. All the links to the indicators that I'm using are down in the description below. So if you'd like to replicate my charts, you can find all the details down there. We can see yesterday we had a large move up in the London session, pullback, New York continued that move, creating relative equal highs here on the 15-minute chart. New York PM session pullback, and then essentially we've just been consolidating now between New York PM and the Tokyo session. As we're coming into the open of the London session, so we are going to be monitoring price from 1 AM. So this is the open of a brand new 4-hour candle. So I like to be at the charts to monitor this just to see if we get any injection of volume as the new 4-hour candle opens. We can see price is coming close to the liquidity of Asia. So we've got this swing low. The other thing that I'm taking note of is this bullish candle. We've got a swing here at the bottom of this bullish candle. We've actually got relative equal lows here between the Asia low and the sell side from the open of the new day. So looking at the way price is grinding down, I'm going to be looking for a reaction after sweeping this level of liquidity. Alternatively, obviously we have the Asia high and then these relative equal highs. So these would be a really good draw on liquidity. So what would be nice would be a sweep of this liquidity to get a long position to take these equal highs out, which were the previous day's high. It's the only levels I'm really interested in looking at on this chart at the moment. So I'm going to drop to the 5-minute chart and start scrolling through. The London session is just about to open. We're taking a drive down to the Asia low. We've failed to take it, however. So we've come close, failed to take it, pulling back. Not going to look for a long here, so it's important not to get sucked into longs when you have not taken the liquidity here. This for me is just engineering liquidity, getting people going long too soon so they can eventually come back and take more stops out. Strong aggressive move at 130, swept this high and then an engulfing candle coming back into the range. Displacement coming lower now, so this is what I mean, they'll quickly come to run the stops that the engineered liquidity that they've got down here. They run straight through that. So now that we've swept this liquidity, I'm going to drop to the 1 minute and I'm going to be looking for a reversal pattern. So another aggressive move lower. We've just broken this swing high here. At the time we're into the new hourly candle, so we're into 2 AM now. We've got a bit of a breaker structure there. But what I will note in these situations, with these after these aggressive moves, I'm usually expecting around 15 to 30 minutes worth of consolidation before we get the reversal. So again, they will want to be allowing people to get on side before the big move occurs. So after a big explosive move, you usually expect a little bit of consolidation. So my eyes are kind of looking at 215 to 230 for a potential reversal setup here. So you can see a lot of overlapping price action. We're not leaving much displacement. So there's nothing that's getting me excited thinking that we're going straight up. We are currently trading into this order block. Obviously fair value gap below the order block. Now if we close through that, this order block will become a breaker block. Mark it as an order block for now. So yeah, we got a strong reaction from the 50% of this fair value gap coming back lower again, 211. So we're not quite into the 215 candle. Doesn't look like there's going to be much of an entry at 215 because we're back inside this range, unless we get an aggressive sweep of this low and then back in. Volume imbalance, fair value gaps. So I'm not loving this price action. What has me worried looking at this is that we are essentially getting this ramped liquidity. We've got trendline liquidity building here. So what this is showing me is that they're inducing buyers to come into the market to take this higher, and they're buying higher and higher up the range. When you see this level, I think that it's very easy for them then to reverse price, take all of the stops out. So this again is what I would consider as engineered liquidity. They're dragging buyers into the market higher and higher up the range and eventually smash through it. So this is not price action that I'm looking to get involved in, because I think that price could easily come through this. I like to see an aggressive move out of a range and then an aggressive move back in. So they're not allowing people to get in the market. They're allowing people to get in the market, allowing people to take trades. Well, generally they're going to come and smash those people out before making the actual move. So we've still got our order block. We need to pay attention to how price reacts at this, because this could convert into a breaker block if it is traded through. So I have traded through it now. I'm going to mark that as a breaker block. We've got a couple of wicks through there. We've got a close just above it on this bullish candle. We've got a fair value gap inside this breaker block as well. Time wise, we're at 223, so we need to be monitoring around 230 to see what's going to happen at the open of the new 15-minute candle. Accelerating away, so the breaker block is holding us. This fair value gap is holding nicely. 227, 28, 29. So you've got the breaker block and price is accelerating away, so there's a potential here for an entry. If you come back and tag the top of this, this would be a high risk in my opinion, but a unicorn entry. I don't like it because of this ramp liquidity below us. It's not the kind of price action that fills me with confidence, but we are moving higher now. We're getting larger bullish candles and we do have a breaker with a fair value gap. So there is a potential entry at the top of this breaker block, which is tapped at 230 with a rejection. So you could potentially take a long position there, targeting the session high and ultimately Asia high is what you would expect to get ran at this point. It isn't a trade that I took. So this is 234. We've created relative equal lows now inside this breaker block. So we've swept the low that we took there, building liquidity above these fair value gaps. Essentially, we've got relative equal lows now above an inefficiency here, which is inside the breaker block. Now we're getting bigger candles, so we can see volume is coming in now at 230. We're definitely seeing some action coming in. So we need to see now a run to the high. So that would have been a really nice entry. Looking at this, if you'd have taken a long position off the top of the breaker block, tagged in at exactly 230, stop loss below the breaker block or below this swing low. You could be nicely into TP1 now at 1.8 and then ultimately looking for the Asia high to get ran for a 3-hour trade. So in hindsight, we've taken that, we've hit 3R, that would have been a very nice setup. See, the only thing that concerned me when I was watching this is this ramp liquidity. I don't like to see this. You see them grinding price up. We could easily come back and take that. There was a potential 3R off this breaker block if you were interested. Now that we've swept Asia high, I'm interested in looking to see how price reacts. So I'm going to mark this as a failure to displace level. I've taken note of these relative equal lows here. it's unusual for price to leave these untested, especially like on the 1 minute time frame. They usually come back and revisit them before continuing further up. So my eyes are on this. So we have a target now. Obviously we've got the ramp liquidity here. We've got a massive inefficient move coming up. So this is not efficient price delivery. We've left lots of fair value gaps, which means that we could get a quick move down as well, just to rebalance this. We've got a draw on liquidity of equal lows. So if you watched any ICT, you know ICT mentions equal lows are a very strong draw on liquidity. This draw on liquidity is above fair value gaps, so above an inefficiency as well. Let's just move this breaker in there. So we can see we've got untapped fair value gaps there. Time-wise, we are at 2:47, so we're really looking for around 3, something at 3 AM for an entry. So we've swept the high. Our break of structure, if we were going off a break of structure, is currently here. So this is the break of structure for a 2022 reversal. So this up closed candle, I'm just going to zoom in so we can take a closer look at this price action. This here is currently our last order block before we've created the new high. So again, we are looking at PD arrays, and failed PD arrays specifically are a really good indication that we might have a reversal on board. So we've got an order block here. If this fails, this will turn into a breaker block. We've already had one failed PD array, which was this fair value gap here. So between candle 1, candle 2, candle 3, we had this fair value gap. That's been closed through. So we're already disrespecting bullish PD arrays now. So we need to see what happens at this order block level. Time wise, we are 2:55. So again, we're really monitoring something into the new hourly candle. So this will be silver bullet hour as well. 3 AM starts, that's our open of silver bullet hour. Coming up, created, is not quite taking the high, so we are generating some liquidity at the top here, just to be mindful of. Displacement through, so that's a really strong sign there. This order block has failed, we've displaced through, and we've closed through this bullish fair value gap. So this is telling us that bullish PD arrays are now being disrespected. We've left a bearish fair value gap at this point as well in here. So this is the unicorn entry again. We have a bearish fair value gap inside a breaker block now, 256. So you're looking for your short entry into the new hourly candle. So the short position will be the tap of the breaker block. You'd have your stop loss just above the high. And our target, as I mentioned earlier, what I was highlighting was the relative equal lows that would created from this long position. So let's just see how price reacts. And as I say, we're just about to come into the new hour, so that's what's got me interested. Again, we've displaced away, bearish fair value gap, so we're seeing displacement. This is 58, it's perfect timing. 59, we are tapped in. So you can see that's just tapped the bottom of the breaker block. New 15-minute candle is about to open, or the new hourly candle, silver bullet hour, is just about to open. Lovely rejection candle as we tap the bottom of the breaker block. And then price aggressively moving away. So really, really nice price action. Zero drawdown. Kind of textbook trade that you want. This is what happens when you get in at the start of 15-minute candles. So you're expecting some kind of consolidation after taking liquidity, which we've had. So this aggressive move up, we have approximately 15 minutes of consolidation at the top. We are entered, volume comes into the market, the open of the new hour, a new 15-minute cycle is opening up. Our target, relative equal lows down here. Tapped with zero drawdown. So a really, really solid 2.5 hour trade. Two really solid trades coming off the back of failed PD arrays in the form of breaker blocks. Really, really nice session. Some lovely price action. Closed in full at this point. Obviously, as I mentioned, I am aware that we do have untapped liquidity above us, and also we have the PPI. Was it PPI? Yeah, PPI happening in New York. So I just want to get off the charts as quickly as I possibly can. Price ultimately reverses very quickly from this level. So you can see this was just literally come back, take a load of this, load of the longs out of the market as quickly as possible into the silver bullet hour. Nice reversal. So you could have taken the Cameron model long here, anticipating a run on these highs. So we've swept liquidity on a lower time frame. So the 1 minute liquidity, we've left a big fair value gap. So there's a potential entry for the Cameron model. Well, Cameron style model for a continuation going up. So actually a balanced price range is this. This is not a trade that I took at all. This is just what I'm seeing right now. So we had this balanced price range. We're coming in. New 15-minute candle. The time here is 3:18. Let's just see if it taps that. Yep, so it taps the balanced price range. So the balanced price range is a bearish fair value gap followed by a bullish fair value gap. So this inefficiency where the two overlap is a highly sensitive area. Price will come back to rebalance this. It rebalances it and then accelerates away. Ultimately targeting your relative equal highs up here if you were in this trade. We'll come back, we've touched the BPR again. And again. And then it accelerates away. So when does that volume come in? That volume comes in at 3:37. The explosive move. Did we have news at 3:37? No, there's nothing on the cards there. So that was just literally injection of volume from the new half-hour candle. So you can see the new half-hour candle opens up. We drive down for 7 minutes. So halfway through the 15-minute candle. So this is putting in a bottom wick, again driving traders in the wrong direction. Halfway through the candle there is a massive reversal at which we go for the highs for a really solid trade there. So some fantastic entries, a really good session to be fair. This was the only trade I took, the one in the middle was the only trade I actually profited from. Conservative today given the fact that we've got major red news in the New York session, but overall some really nice profits to be made. Trading both sides of the market. So I hope you found that useful. If you did, please leave the video a thumbs up. If you've got any questions, then leave them down in the comments section below. And likewise, if you're enjoying the content, then please consider subscribing. We're having some fantastic growth on the channel and it would be amazing to have you on board. Thanks for watching. I'll see you again in the next video.